Welcome back to the Deep Dive. Today, we're zeroing in on something that keeps global trade moving, but often stays completely out of sight. Retirement for seafarers.
That's right.
You know how the skilled people on these massive ships actually plan for their financial future.
Yeah.
And it's not a niche issue, is it? This is really critical for keeping skilled crews on board, which the whole maritime economy relies on.
Absolutely. It's a huge global workforce, but their financial security is often precarious. Our mission today, digging into the sources you've provided, is really to unpack why the usual retirement systems just don't work for them.
Okay.
We need to get past the basics and look at the specific solutions companies and countries are trying out.
Right, let's get into it. So we know it's specialized work, high stakes, but what exactly makes planning for retirement so uniquely tricky for seafarers? Is it just being away all the time? Or is it deeper, like the way they're employed?
It's fundamentally the employment model, I'd say. Unlike your typical 9-to-5 job, seafaring is intensely contractual. Think fixed-term contracts, maybe 3 months, maybe 9 months, sometimes a bit longer.
So not continuous work.
Exactly. It means intermittent employment. You can have significant gaps between contracts. No single employer paying into a pension pot for, say, 30 years straight. That lack of continuity, that's the real kicker for building up retirement funds.
Okay, so the contracts are one thing. Then you add the global travel on top of that. The source material called it an intricate web of affiliations, which I thought was a great phrase.
It really is.
You might have crew from the Philippines, Poland, India, all working on a ship flagged in, I don't know, Panama,
Owned by a Greek company.
sailing between China and Brazil. It sounds like an administrative nightmare.
And that nightmare translates directly into what we call fragmented coverage for pensions.
Fragmented coverage.
Yeah, because a seafarer is constantly moving. They might be under a Greek contract one year, paying into that system, then maybe an Indonesian one the next, then working on a Liberian flagged ship.
Ah, I see.
They end up making contributions in maybe half a dozen different countries over their career.
But never enough in any one place.
Precisely. They never accrue enough credits or meet the minimum contribution period in any single national system to actually qualify for meaningful benefits when they retire.
Wow. So they could work hard, contribute for decades, and then find out they've got 5 tiny, almost useless pots of money scattered around the world.
That's the risk. They essentially lose entitlements they've technically earned. It's a massive systemic failure, really.
It sounds like it.
Yeah.
And what's missing is there's just no way to pull all those contributions together.
That's the core problem. There's no widely accepted global mechanism to easily transfer or consolidate those pension rights across borders for seafarers. It's like having bank accounts in 5 countries that refuse to talk to each other.
Okay, so mobility and fragmentation, that's one major challenge.
Yeah.
What about the job itself? These aren't office jobs. They're demanding, sometimes dangerous. Does that factor into retirement needs?
Oh, absolutely. That's the next critical layer. The occupational risks are significant.
Like what specifically?
Well, you've got the physical demands, obviously, long hours, heavy work, often in difficult conditions. Then there are diverse health hazards, exposure to different climates, potential accidents, and the psychological stress of being away from home for long periods.
Right, isolation, pressure.
All of that. And it means seafarers might need or be forced to retire earlier than people in shore-based jobs, or they might become unable to work due to health issues.
And the systems need to account for that.
They really do. The sources mention some pretty stark figures, like medical checks in the Philippines. They found nearly half of the older male higher-ranking seafarers were classified as Risk Class C.
Risk Class C. What does that actually mean for them? Does it mean they have to retire early?
It signals a pretty high health risk. It means they're much more likely to need medical repatriation or, face mandatory early retirement. They're no longer medically fit for sea duty.
So the standard retirement model, work till 65 or whatever, just doesn't fit.
Not at all. You need pension systems with real flexibility, options for earlier retirement without massive penalties, and crucially, strong disability benefits that kick in when needed. A system designed for an office worker just doesn't cut it.
Okay, so if the standard national systems often fall short, where are seafarers actually getting retirement provisions from now? The sources point to 2 main racks: company schemes and national social security. Let's talk about the company ones first.
Right. Company-based schemes, these are often dangled as, recruitment and retention tools. Makes sense.
Sure.
They generally come in two flavors. You've got defined benefit, DB plans. That's where the company promises you a specific payout when you retire. They take on the investment risk.
Okay, the old style final salary pension, sort of.
Sort of, yeah. And then the more common one these days is defined contribution, or DC.
That's where money goes in, maybe from you and the employer, but what you get out depends on how the investments do.
Exactly. The risk there is all on the seafarer. Many companies also add extras, like life insurance or disability cover, which, as we've said, are really vital given the job's risks.
Okay, but relying on a company scheme, doesn't that bring its own problems? Like, what if you change jobs frequently, which you said is common? Do you take the pension pot with you?
That's the big catch: portability, or the lack of it.
Oh.
The upside of company schemes can be better benefits, maybe tailored more to the industry, but the huge downside is portability is often limited. If you switch employers, you might have to cash out a small amount, often paying fees or taxes, or freeze it and just start again with the next company.
So you're back to fragmented little pots again, just company ones this time.
Pretty much. And there's another risk, especially with some DB plans. What if the company goes bust? If the plan isn't fully funded and ring-fenced, the security depends entirely on that one employer staying afloat.
That sounds precarious. Okay, let's swing back to the national systems then. You mentioned the admin nightmares earlier, especially around residency rules.
Yeah, it's often a bureaucratic maze. To qualify for many national social security systems, you usually need to meet strict residency requirements or have a long, unbroken contribution history in that one country.
Which seafarers just don't have.
Exactly. Someone might live in Manila, work for a Dutch company, on a ship flying a Liberian flag. Who do they pay into? Who pays them out? They often can't meet the rules for the Netherlands or Liberia.
So they fall between the cracks.
Or they default back to their home country's system, which might not be designed for income earned abroad, or might just be inadequate.
It sounds like a system designed to exclude them, almost.
Yeah.
Are any countries getting this right? Are there places that have adapted their systems?
There are some positive examples, yeah, though it's varied. Countries like Poland and Norway, for instance, they've actually set up special regulations or even dedicated branches within their national systems just for seafarers.
Really? What do they do differently?
They tend to acknowledge the tough conditions, the need for potentially earlier retirement, better disability cover. They've basically customized their national safety net for this specific group.
That sounds much more sensible. How does that compare to the big countries that supply a lot of the world's seafarers? Thinking the Philippines, Indonesia.
That's a different challenge. These countries, while they've often signed up to the big international agreements like MLC 2006, they frequently rely on the foreign contracts their citizens work under to provide the benefits.
Right.
So there's often an implementation gap. Their own national systems might meet the minimum standards on paper, but they might lack the financial clout or the admin setup to provide really solid coverage, especially when the employer is overseas and keeps changing.
You mentioned the MLC 2006 there, the Maritime Labor Convention. That sounds like it should be the solution, doesn't it? An international standard from the ILO.
It's definitely the foundational piece. It's hugely important.
What does it actually require countries to do?
Well, fundamentally, it requires the flag states, the countries where ships are registered, to make sure that all seafarers working under their flag have Social Security protection. That includes things like healthcare and critically old age benefits, retirement pensions, and importantly, regardless of the seafarer's nationality.
Okay, that sounds good. Protection regardless of nationality on that flag state's ships. But you said implementation gap. What's the catch?
The catch is, while it sets the minimum standard you must provide coverage, it doesn't tell countries how to do it. It doesn't mandate a specific type of scheme or, crucially, how different country schemes should interact.
So its effectiveness really depends on how seriously each flag state takes it and how well they monitor things.
Exactly. And enforcement varies a lot between flag states. Some are very diligent, others less so.
And it doesn't solve the core problem of moving between flags and countries.
No. It brings us right back to that multiple jurisdictions challenge. The MLC is vital, but what's still missing are those concrete bilateral or multilateral agreements between countries specifically designed to let mobile workers like seafarers add up their contributions from different places and transfer their entitlements smoothly. That's the legal plumbing that's largely absent.
It really feels like a system creaking under the strain. And talking about strain, the demographics aren't helping, are they? The sources mentioned an aging workforce in the maritime sector.
That's a major looming issue. Absolutely. As the current generation of experienced seafarers gets older and starts to retire.
Who pays for their pensions?
Well, the demand on whatever schemes exist, company or national, goes way up. And if you combine that with potentially fewer younger people entering the profession to contribute,
You get a solvency problem. Fewer people paying in, more people drawing out.
precisely. Especially when, as we discussed, seafarers might need to retire earlier. It puts immense pressure on the long-term financial health of these already fragmented systems.
Okay, so we've got fragmentation, jurisdictional nightmares, demographic pressure. How do we fix this? Can technology help break through the complexity?
Innovation is definitely seen as key here. We have to move beyond purely national thinking, and tech offers some real possibilities.
Like what?
Well, solution one is really about digitalization. Imagine centralized, secure digital platforms, ones that could track a seafarer's entire employment history and all their pension contributions, no matter which country's flag they sailed under or who their employer was that month. Just one single verified record.
That would cut through a lot of the admin fog, wouldn't it?
It absolutely would. It gives you that unified view that's currently impossible to get.
And what about actually moving the money or the entitlements across borders? That sounds like the really hard part.
That's where other technologies could come in. Things like blockchain or distributed ledger technology.
Blockchains for pensions.
Potentially, yes. The idea is you could create a secure, transparent, and maybe automated way to record and transfer pension rights across different countries or schemes. It could simplify those cross-border transactions and build trust without needing dozens of complex bilateral treaties.
Interesting. So using tech to create a kind of global ledger for seafarer pensions.
That's the concept. It could potentially shift the management away from individual employers or national systems towards a more robust, transparent framework.
Okay, so if we were drawing up a wish list, a policy roadmap based on all this, what are the absolute must-haves to make retirement security a reality for these workers?
I think the consensus points to a few key things. First, and this is the big one, we desperately need either a universally recognized, genuinely portable pension scheme, maybe something industry funded or managed, or at the very least, a strong international agreement that allows people to easily combine, aggregate, and transfer their pension rights across borders.
Right, solve the fragmentation.
Solve the fragmentation. Second, much more active collaboration is needed. Flag states, the countries supplying the labor, the shipping companies themselves, they all need to work together to harmonize standards and make portability work.
Get everyone pulling in the same direction.
Yes. And third, at the national level, more countries need to follow the lead of places like Norway and Poland. Set up dedicated Social Security arrangements for seafarers that understand their unique situation, the need for early retirement options, solid disability cover, and so on. Tailor the system.
That sounds like a solid plan. It requires a lot of cooperation, though.
It does. But to sum it up, the current patchwork is just, well, it's inadequate because it tries to apply land-based rules to a truly globalized transient workforce.
It just doesn't fit the reality of their lives.
Exactly. The only real way forward is to move beyond these localized, often failing systems towards something much more cohesive, flexible, and genuinely globally harmonized. Something that actually reflects how crucial their mobile work is to all of us.
That's a perfect summary of the challenge and the needed shift. And as we wrap up this deep dive, here's maybe a final thought for you, the listener, to mull over.
Okay.
We've established that seafarers' work is transient, it's mobile, and it's absolutely fundamental to global trade and our modern way of life. The industry needs that mobility. So the question is, should the maritime industry itself, the companies, the ship owners, the charterers who directly benefit from this mobile labor, bear a greater, maybe even mandatory responsibility for funding a robust, centralized, universal retirement framework for them? Instead of leaving the burden on these fragmented, often inadequate national systems that struggle to cope, it really pushes on the idea of global corporate responsibility versus the limits of national welfare states in a globalized world. Something to think about.
Definitely food for thought.
That's all for this deep dive. Thanks for joining us. Talk to you next time.